Hi, everybody. This is Dan Sheridan from Sheridan Risk Management. And I want to talk about for a couple minutes here two new courses or classes, on-demand classes that I just finished. And both of them are based on trades, uh, probably two of the more popular trades in our community this year that have been working real well. And uh, one trade will be how we've been trading all year. The other trade, I'm going to have a little tweak to it. So both of them are calendars, mixed month trades. A calendar is simply a mixed month trade where we're buying the further out expiration, selling closer in. And you're doing it with the strike of your long and your short would be the same. If it's more neutral calendar, more range bound, you would put your short strike at the money, calls or puts, doesn't matter. If you're more bullish, like in this instance where it's 63.38 in the SPX, if I was more bullish, I would put my strike on the calendar maybe at 63.80. If I was bearish, I might put it at 6300. And so that's a calendar, as opposed to this word when you hear the word diagonal. Diagonal is simply a mixed month spread. You're buying the further out, selling the closer in, different strikes. So the first class, or the first video, would be called Under the Market. I just threw in there Under the Sea, just because that was a favorite song, Under the Sea, one of those movies that your kids watched and the parents watched with them, and I liked it. But it's a very effective trade that we've traded, one of the more effective trades, at least in our community, for 2025. Um, a calendar under the market and versus doing a calendar at the money. And I'm going to talk about that in the course, give you why we do it, precisely why we do it, and the advantages versus doing maybe a typical at the money calendar, why this is more effective. And then the whole four-step risk management plan. How would we adjust these if it goes against us? But the plan on this would be range bound for uh, for weekly or monthly income. This would be a range bound strategy, and that's the purpose of it. But that tweak has really worked effectively uh, in basically an up market for the most part, except for the blurps, quick blurp in April. And what you're seeing here is just a basic at the money calendar. Basically, you're near your strike is near at the money. In Thinkorswim, this is your graph today. This is your graph at the expiration of the short, August 8th, which is 16 days from expiration. And you could see as I take the date and start moving, even if I move it, and this is basically a 15-day trade, 16-day trade, if I move this 1 week ahead from the 24th to July 31st, you can see that purple line starts moving up towards your expiration graph as you're accumulating theta. Calendar is a pretty neutral delta, positive theta trade because your shorts will decay quicker than your longs, and it's long vega trade because you're buying more extrinsic value in your long than your short. So I think you'll like the first video on under the market, under the sea calendar, how we trade it. And the nice thing is, because we've traded it, we'll give you a lot of the things we found work better. What days is better to put it on? When is it better to put it on? Do you scale into it? You just put it your normal size. When don't you put it on? What do you do around news type thing? So a lot of the Uh, the nice thing about this, because we've done it a lot, you're getting a lot of intricacies, what we found has worked and not worked, trying to save you from some of the mistakes. The other calendar um, is called, for lack of a better word, transformer calendar. And so you say, was the transformer calendar one of your better trades in the community? No, no. What the trade was is a diagonal. Poor man's covered right was one of the most effective trades in the community for 2024. Uh, and that's what it is. It's a poor man's covered right. But I was thinking about it. I was thinking about, well, is there a better way to skin the cat? Is there a better way maybe to, uh, do you start with a calendar and uh, then turn it into some type of diagonal? And why would I do that? And how does that work? And again, this plan is different, right? The plan of the under the sea or under the market calendar is simply I'm putting on range bound trade basically. And uh, I'm looking for market to stay within a range. Basically when you're looking at a calendar, you're looking at the expiration break evens. And as long as we stay within there, you do well, blah, blah, blah. That's the calendar. But a diagonal trade is more long portfolio in the same category as like covered right or a cash secured put. You're intentionally long delta. So my thought was, do I want to start that? I don't know when we're going up or whatever. So I thought, start I think a better way to do a long diagonal. Start with the calendar and then transform it into a diagonal, whichever way the market goes. So those are the two new classes I'm coming out with, both on demand. One would be range bound under the market. The other one is kind of quasi. It's range bound, but it's flexible. As we move, we're going to turn it into a diagonal. So that would be in the long portfolio, like a covered right or cash secured put. And we have them both will be lumped together because I think they're two effective trades. You'll have one range bound and then one for like the retirement part of the portfolio, but I think more effective than a long diagonal. So those are the two trades. And I'm excited about launching these. And if you have any questions, I'm Dan at SheridanRiskManagement.com. Have a nice day, folks. Thanks.